Hello and welcome. You are watching Property Hotline with me, Kavita Krishnan. And today we are going to answer all your questions related to taxes that you pay while buying, selling or investing in real estate. With me in the studio is Suresh Surana. Suresh is the founder of RSM Astute Consulting. Suresh, welcome to the show. We have Mr. Gonsalves who's written in on email. Let's start with his question first. He says that a building is being redeveloped and is getting additional area. It has now been made into 3 smaller flats instead of 1 big flat. Now development is self, that is, they are not going through a builder. So is the extra area built taxable?
Yeah, so Mr. Gonsalves here, the important thing is that it is a case of self-development. So either you on your own or along with the other cooperative society members, you are doing the development. You are not entering into a development agreement with the developer, which amounts to some exchange of your existing area and getting new area in lieu of that. So therefore, there is no transfer involved. In order to have any taxability, there must be a transfer involved. So here there will be no tax impact for you when you get the 3 flats in exchange of your existing flat. Also, the additional FSI also will not be taxable at this stage. Of course, as and when you sell all these flats with the additional FSI, there will be capital gains tax at that point in time. But at present, as it is a case of development on your own, there will be no tax implication.
So, Suresh, in that case, from the point of view of a housing society, it's actually far more prudent from the tax perspective at least to go in for self-redevelopment rather than,
Absolutely. I think you are spot on, because basically if you are doing, cooperative society is nothing but a compendium of the members. So what you could do individually. So let's say if you own a plot individually and you have a house and you demolish and you construct another house in place of that, there is no sort of taxable event there. So same way, only thing which is happening that instead of one person doing it, there are all the members together collectively doing it. But that doesn't cause a taxable event. But the moment if you enter into a development agreement and you are surrendering your existing premises and getting some new, different premises. So again, in those cases, how you word the agreement is very critical. But self-development definitely is a very, very clear option.
Also, typically when you go in for redevelopment, you have to first work towards a corpus fund. Now that will take care of the money that you'll spend during the redevelopment, and also ideally it should take care of the maintenance for the next say 10, 20 years at least. Now this, even in self-redevelopment, I'm sure that you would have to come up with a corpus fund of this kind. Now, is that taxable?
No, so again in corpus fund, what you are doing, all the members are going to contribute their respective pro rata share. So like as the example what we talked earlier, if you demolish your existing, let's say property and you construct a new property, you fund it yourself. Here all the members are going to put it together in the cooperative society and doing the development. So it doesn't change, anything. As far as again maintenance deposit is concerned, you are basically putting the maintenance deposit again as members together. So there is no income as a result of that.
Right. So this is something that small cooperative housing societies, small size housing societies which own the land that they're building is constructed on, which means that if these societies have their conveyance in place, they can actually consider self-redevelopment, and there are a couple of banks which are financing that as well. So that is probably something that you should consider, especially because it is very prudent and beneficial from the tax perspective. Atul writes in through email. He says that he's got 3 acres of land. Now he wants to sell this, and he's got an offer from a joint venture for this, Now developers are saying that he has to pay the taxes. They will be giving him a caution deposit, of course. He wants to know what is his liability. Atul asks, would it be better if he gives it for outright sale instead of getting into a joint venture? Will he have to pay taxes then as well? Essentially, if you are making any kind of income, there is tax that you will need to pay, right, Suresh?
Yeah. So, Mr. Atul, what happens that in case obviously you sell it outright and you have been holding this land for some period, I presume it is more than 3 years. So it becomes a long-term capital asset for you, and you pay tax at a lower rate, which is a rate of 20%. You also get the benefit of indexation. You also have the option to reinvest in another house property, and you can get exemption under section 54F, or you can invest in bonds up to rupees 50 lakhs. So that is one option. Now, in case you feel that it is better to do the development and maybe the realization will be much higher. So again, it depends upon, in case it is not a joint development agreement. So there are two kinds of agreement. One kind of agreement is that you are basically giving up your right and you are getting certain units in exchange of that. In that case, you are converting your land into a kind of what we call it stock in trade. So you are now getting into business. So there is a specific provision that when you convert a capital asset into stock in trade, whatever is the fair market value on the date of conversion will be treated as a capital gains, will be subject to capital gains tax, but the taxability will get postponed when you actually sell the developed property. So when you sell the property, there will be two characters. One will be what was the increase in the land value as on the date of conversion, and the second is whatever is the incremental value on top of it. So let's say if you had a land for which historical cost was 1 crore and the land value is 10 crores now, and you then let's say spend another 5 crores on construction and you sell it for 20 crores. So 9 crore what you are making initially on the date of conversion will be treated as a capital gain, and that will be subjected to tax in the year of sale of the flats, and it will not be taxed right now. The remaining 5 crore what you made over and above the conversion price will be treated as a business income, and that will be subjected to full tax. So in some ways there are two characters within the same income. First one is a capital gain and second one is a business income.
So essentially what you need to remember is more the gains, more the taxes that you will need to pay. So that is something you need to keep in mind. And of course, you need to look at the quantum of gains that you can really expect before you take a call on what you want to do over here. So it's not essentially the tax perspective, it's more the kind of income that you will get if you would go for a joint venture vis-a-vis an outright sale. Question from Manohar now. Manohar wants to know if he is buying commercial property, does he have to pay VAT and service tax on the purchase? It's a joint venture property with a builder.
Yeah, so first of all, whether it is a commercial property or a residential property, the VAT and service tax is applicable on both as long as the property is under construction. So once you get the completion certificate, like in case of VAT, once the completion certificate is issued by municipal corporation, and in case of service tax, once it is issued by the competent authority, after that it becomes an immovable property and there is no VAT or nor any service tax. But until that point in time, in case there is any sale which is happening, there would be a VAT. In Maharashtra, the rate is at the rate of 1% for composition scheme, and service tax is 4.5%. So that would be payable if it is an under construction property.
Right. Also, again, Suresh, he says it's a joint venture property with a builder. So, what are there any other taxes that he'll have to pay? He's also missed out on the TDS aspect, which of course he would have to pay, right?
Yeah. So yeah, obviously, if it is more than 50 lakh rupees of purchase, then under section 194 IA, you have to deduct tax at the rate of 1% and pay it to the government on behalf of the seller. And of course, the seller will get credit for the same. So that is, it's just a pass through.
Right, yes. And like we just discussed in the previous question, he's saying that this is a joint venture property with the developer. So in this case, there would be other taxes that he will have to be prepared for.
Yeah, so like we discussed in earlier case, of course, right now I think his question is more on VAT and service tax, whether it is applicable to commercial premises or not. I think that's that was a question what I understood, which is applicable to residential as well as commercial. And as long as it is under construction, that is the only aspect which is there.
And of course, like Suresh just pointed out in the earlier question, you will of course have to pay taxes that will come. You will need to pay taxes on the property that is being transferred in your name, and that will come into play when you actually get possession of the property. The other thing, of course, if there is money that you're making of this property by renting it out or whatever, then you will have to pay tax on the income that you are making by renting out that property. Dilip has called in from Dahisar with a question. Dilip, go ahead. What's your question?
Yes, Mr. Surana, I have sold property and I want to invest fund in the bonds. So shall I invest full value of the sale consideration or sale consideration minus purchase? Tell me accordingly.
Yeah, so under section 54 EC, that is where you invest in the bonds either of the NHAI or so basically you will have to invest the sale proceeds there, and there is a limit of 50 lakh rupees also on the total amount of investment what you can make.
So essentially, Dilip, what you need to do invest is the profit from the sale, not the entire sale proceeds. You have to reinvest the profit from the sale in bonds. Moving on, we have a query from Mukund, which is coming through email. Now, Mukund says that he's selling his residential property. The payment that he receives will be invested in an under construction building. Now, the building is sold, capital gains will be long term, but the property investment is under construction. Possession is due in September 2019. He wants to know whether his 3-year period of capital gains will be calculated from now or from the day he gets possession. He is investing 100% of the money he's received right now.
Yeah, so basically under section 54 where you are claiming exemption for the reinvestment, you need to complete the construction within a period of 3 years from the date of your sale. It is not important that you have paid the amount. So just the fact that you have paid the advance towards purchase is not enough. The construction must be completed within a period of 3 years. The fact that you have made the advance payment right now, or you made the payment against the purchase, would mean that you don't have to deposit this amount in capital gains account. Otherwise, when you are filing your return, for the year of sale, you will have to transfer this amount to capital gains account scheme, and from there only you have to reinvest. Since you already invested, you don't have to open a capital gains account for this purpose. But you have to ensure that you get the possession within 3 years from the date of the sale of your existing property. There are some judicial verdicts which have said that as long as the construction was to be completed before the period of 3 years, but if there is reason beyond the control, then there may be some relief allowed. But I would say it is better to be careful and making sure that you do get the possession back within a period of 3 years.
Right. Moving on, we have a question from Pune now. Sachin Inamdar has written in and says that he has property in Pune. It is an ancestral property and he's entered into a joint venture with a builder to make flats on the property. Now he wants to know what are the capital gain implications. Will capital gains be applicable to him because it is an ancestral property when he enters into joint venture with the builder or when he gives possession of the flats to consumers? So when does it apply? This is something that we've already answered. But the other aspect of it, Suresh, the fact that this is ancestral property that has been in the family, which he's now choosing to develop. So does he have to pay capital gains? Because like you said, there will be a transfer of property in any case.
Yeah, so Mr. Sachin, see, whether it is ancestral property or owned by you, that by itself doesn't make any difference. The only difference it would make is that whatever was the cost by the previous owner, whoever purchased and from whom you have inherited, that cost will be taken as your cost, and you will get the benefit of indexation as well as the period of long-term gains will be counted, including that period. So you will get the benefit of this, but it will definitely be taxable. Again, as we have talked about, when you are converting this into a business asset, whatever is the fair market value as on the date of conversion, till that date it will be deemed to be a capital gains, and after that it will be treated as a business income.
Right. So whether or not it is ancestral property, you will have to pay capital gains tax on that particular transaction. Question from Simran now. While buying the flat, Simran had paid full amount in lump sum with no TDS. Now she wants to know whether the builder will pay the tax or will Simran have to pay it later.
Yeah, so Simran, assuming that your transaction value is more than rupees 50 lakhs, then you have to deduct the tax at the rate of 1% and pay it to the government. Since you have not done that, you run the risk of not only being called upon to pay this tax amount, but also there is an interest at the rate of 1% per month, and also there can be a penalty which is 200 rupees per day for non-filing the return. So I would still suggest that if there is a way in which you can pay this tax and recover from the from the seller and give him the tax credit certificate, so he is going to get credit for it. It is not going to be a loss for him. Then it will absolve you of all these issues and accept that okay, whatever delay has happened, but other than that, you will not have any other consequences.
Right. Suresh, if you could just elaborate a little on this aspect of TDS. This, of course, was announced in the budget, but it somehow has not really trickled down to home buyers the way it should. What kind of property is TDS payable on? Is it levied on both under construction and on ready property? Also, in terms of under construction property, now what we know or what we hear is that you have to pay TDS on every installment. Could you just break it down a little for our viewers?
Yeah, so absolutely. Whether it is residential property or commercial property, whether it is under construction or not, as long as the total transaction value is either rupees 50 lakhs or more, then that is the threshold. So if you are buying a property below rupees 50 lakhs, it is fine. You don't need to deduct anything. If it is more than rupees 50, if it is equal to or more than rupees 50 lakhs, then tax at the rate of 1% has to be deducted. We do understand this is a genuine problem because many of the buyers are not really are not carrying on business, and they do not have tax deduction account number also. But only one thing I would like to add here: it is not necessary to get a TAN number for this. You are allowed to make the payment. And if you don't pay, you run the risk of being called upon to pay later, as we talked earlier, and also the risk of interest and penalty. So I think people need to watch out for this. And of course, it is only at the rate of 1%, and the seller or the developer is going to get credit for it. So there is no loss really, but it is a compliance issue.
Right. And what happens when I buy under construction property? Do I pay TDS on every installment?
Yes.
And this is
as long as the total transaction value is rupees 50 lakhs or more, every single payment, whatever you make, you will have to really deduct this tax and pay it.
And this will be 1% of whatever is the amount that I'm paying as installment.
Yes, that's right. It will be 1% of the whatever amount is being paid.
And if you could, I know you've already said this earlier, but if you could just point out what is the penalty, because it is quite a hefty penalty and it really doesn't harm to repeat it once again.
So there are three things. One is, of course, the tax amount itself, because you are not paid that, you are deemed to be in default for that. Then there is an interest at the rate of 1% per month. And then finally there is a penalty for non-filing the return, which is 200 rupees per day. So that can be pretty severe. Although in practice I don't see that they will impose this kind of penalty, but you run the risk and you are at the at the discretion of the assessing officer.
And Suresh, back me up here. If I'm not mistaken, you have to pay the TDS within the 7th of every month. So even if I have say paid I've paid the installment say on the 20th of this month, I have time till the 7th of the next month to pay this off?
I believe this is required to be paid within 7 days.
Okay.
And not, you don't have, unlike many other payments in case of business.
So within a week, you get a week's time to pay your TDS, and you need to ensure that it is paid within a week. However, it is a fairly simple procedure. You can pay it online, and the government has made it a fairly simple procedure. There's a form that you need to fill. And I guess most developers nowadays are also hand-holding buyers in ensuring that this is done, because of course they have to claim credit at the end of it.
Yes.
Moving on, we have Ram Prasad, who's written in through email. Now he has property in Bengaluru and he has entered into a development agreement with the builder to build flats on this property. Now he wants to know, when will long-term capital gains come into effect? Will that start from the time of agreement with the builder, or when he sells his share of flats that the builder constructs for him? We are getting a lot of these questions today.
So it looks like a lot of people are doing development. But anyway, I think the crucial question is whether when you are entering into development agreement, is it a joint development agreement, or is it that you are just giving your portion and you are getting certain units? So let's say if I say I am giving you the land and I am going to get, let's say, 10 flats in lieu of that. So there is no joint development. I am not concerned about his cost. I am not concerned about his overall profit. I am exchanging my land for the 10 flats. So in that case, basically it becomes a transaction. Even an exchange is treated as a sale, for tax purposes, and you will have to basically pay the capital gains on that basis. And then as and when you sell the flat, I mean, if you are getting number of, let's say, flats, it might be treated as a adventure in the nature of trade, because so then it may be treated as a business income. Or if your intention is to continue to hold that property for your own use, or then it can still be a capital asset. Otherwise, in many cases, if you are doing a development and trying to sell, it will become an adventure in the nature of trade from that point onwards.
Right. And moving on from there, another very interesting question that's coming through email. This person has says that he has declared immovable property assets under IDS 1, the income disclosure scheme, during September 2016. Now he wants to know what will be the period of holding of such property for the purpose of computing capital gains on such property in case of sale.
Yeah, so that's a very, very interesting question. As you know, there was an income disclosure scheme which was in force till 30th of September 2016. You could have declared any asset including a property. So one major thing, while the value as on 1st June 2016 is taken as the value for the purpose of charging the tax, which is at the rate of 45%. What they have actually allowed is that in case of property, if it was by way of a registered deal, kind of deed, then you can count that period of holding. So let's say, for example, if you declared under IDS a property which has been held since 2012, you will get the benefit of that period of holding, and therefore it will qualify as a long-term capital gains and reinvestment and all. So that is a benefit which I think people should be aware in case you have opted for IDS scheme.
Okay, we have K. Ramachandra now, who's called in from Mulund. Mr. Ramachandra, what's your question?
Yeah, my question is very simple. I purchased a flat in Bangalore recently, and agreement, everything is finalized. But the problem is that I want to pay property tax for the first year, but I don't understand this Bangalore. What is that system? First year you have to pay the tax going to the office, then only you can do it in net. I am in Bombay, and how I don't know I can go exclusively for this and pay the money. What is the interest in government to that? I have to go there and pay the money.
Is that the case? Do you need to go to that place and pay the money? Is that how it works in cities across the country? Suresh?
Yeah, because I'll tell you the first year you have to pay.
Right, Mr. Ramachandra. Let me get in Suresh here. Suresh,
no, so I am
do
personally not aware of what is the procedure in Bangalore.
But how does it work in Mumbai? Do you need to go yourself to pay the tax?
No, that is very unusual. But anything is possible in terms of regulations, because sometimes the rules have not kept pace with the changes which are happening, and every single state government or municipal corporation has not necessarily adopted the online kind of procedures. So you can find very vast kind of different practices. I would say the best advice can be only given by someone local, and maybe the developer from whom you purchase the property, and maybe if you can give power of attorney or some other way. I'm sure there must be some mechanism, but frankly I am not aware of the exact procedure.
Right, Mr. Ramachandra, that's actually a very smart suggestion over here. You can actually get in touch with the developer from whom you bought the property and check with them whether this really is a case, because they do have an entire legal team working on all of this. They have tax experts, people who are interacting with the local authorities, and for all you know, he might just be able to help you out of that spot that you find yourself in. But moving on, we have Pawan, who's written in through email. Now he has 3 residential properties and 1 industrial plot, which he bought in 2003 in Chennai. Now he would like to sell the industrial property and buy the 4th residential property. Is he eligible for capital gains tax? I think he means capital gains exemption. What would you say, Suresh?
So what I understand that he is having an industrial plot.
Right.
And then he wants to invest in the 4th residential property.
Right.
So that, unfortunately, under section 54F, it is not eligible. Only if you have 1 more property, till that point, then it is okay. They are allowing you to buy the 2nd property. But if you have, you're selling an industrial plot and you are investing in the 4th house, that is not eligible for exemption.
His 4th house is essentially considered as income, so he will have to pay complete tax on that.
Yeah, he will have to pay capital gains tax on that.
So
of course, you get the benefit of the long-term capital gains. If you are holding it for more than 3 years, you get the benefit of indexation. You can invest in bonds. All those things remain, but not the benefit of investing in a residential property.
So you can claim exemption for the 2nd property, and that's it. If you buy 3rd property or 4th property, there is no exemption that you are technically, that legally that you can claim on
now,
that
now the
purchase.
only point I can add there, that suppose in case, let's say there is a gifting which happens between let's say someone else in the family who doesn't have any other residential property or is just having one property, then on the gift there is no tax, and then in gift the period of holding of previous owner is also counted. And then if the person invests, now whether that would be subject to any stamp duty, you need to see. Like Maharashtra, there is no stamp duty between close relatives. But some other states, on the gift also there may be a stamp duty. So you can look at those. But otherwise, just by the way you are describing, it will be subject to tax.
To put a different question to you. Now, say I hold one property, which is the one I live in, and I have another property which say I've leased out or whatever, and I sell that. I sell that once, I sell that the second, then I sell the second house, then I sell the third house, and I'm constantly reinvesting. So I'm not buying a third or a fourth property. It is just a second property that I'm essentially selling and reinvesting. Will that be, can I claim capital gains exemption?
Yeah, so in the case of residential house, if you are selling and buying another residential house, that is under section 54, where there is no such restriction. You can do that, even if you own any number of houses. But selling an industrial land, which is not a residential house, and trying to invest it in a residential house, there is a limitation that only if you have only one additional property at that point in time, that is fine, but not beyond that.
Okay, Suresh, so very quickly, just for clarification, if it is a residential house, I can invest in any number of homes and I can claim capital gains exemption. As long as I'm selling a home and buying a home.
Yeah, as long as you are owning any number of homes is okay, but you have to purchase also one residential property only.
Right.
Yeah.
Right. With that, we do come to an end of this episode of Property Hotline. Suresh Surana, thank you very much for coming in and answering all those questions. And we will, of course, help you with answers to all your questions on real estate, whether it is buying, selling and investing, legal issues, home finance or taxes like those we answered today. So call, write in or tweet to me. We'll make sure that all your questions are answered. Thank you so much for watching.
Thank you.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/Magicbricks Now. And don't forget to click the like button. You can also follow us on Twitter at Magicbricks Now. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/Magicbricks Now.